We very well could be within 2 months of seeing a breakout for that of Bitcoin. This, according to an article report from Cointelegraph, they're referencing from, I believe it's pronounced Hong Sung. I apologize if I'm mispronouncing the name. I did the best that I could there. I'm going to have a link to this article down in the description below. I'm going to share my thoughts at the end of this. I am not a financial advisor. This is not financial advice. Everything I'm sharing is my own opinion. It's my own research. I highly encourage you guys to go do your own research. And with that being said, let's go ahead and dive on into the news. This article, written by William Suberg, says Bitcoin 6 to 8 weeks from breakout as Hong Seng echoes Lehman Brothers dip. Volatility is closing in, but traders may have to wait until the end of the year if history is to repeat itself, one analyst warns. Bitcoin waited for cues at the October 24th Wall Street Open as expectations of a breakout ran high. Hang Seng drops most since 2008. Data from Cointelegraph Markets Pro and TradingView tracked a mundane trading day for Bitcoin USD after the pair hit weekly highs of $19,700 overnight. Despite what Michael van de Poppe, CEO and founder of trading firm 8, called way worse than expected manufacturing data from the United States, Bitcoin suffered from a declining trajectory on the day. This led on-chain analytics resource material indicators to suspect that resistance would remain in place. Sunday, Bitcoin failed all attempts to reclaim the 2017 top, it said, summarizing the latest 24 hours price action as per its proprietary trading indicators. The change in the trajectory of trend precognition's A1 slope line after the D and W close indicators a loss of momentum. Price is currently pinned between the 50-day moving average and the trend line awaiting the TradeFi open. Van de Poppe, meanwhile, put the sell levels to beat at $19,600 and $20,700, adding that the US dollar and US bond yields were showing some slight weakness. Upwards momentum is fading on both yields. Popular trading account Game of Trades continued. When this last happened, the markets went on a big run. It was nonetheless macro markets offering clear signs of volatility to come on the day, specifically in Asia, where the Hong Kong Hang Seng saw its biggest daily drop since the Lehman Brothers implosion in 2008. It's like a tongue twister there. Game of Trades likewise considered the S&P 500 as a potential source of a massive move with volatility increasing. Big expansive move may be months off for Bitcoin. For Bitcoin, volatility could be a long time coming, as a classic indicator delivers signals seen only a handful of times before. As noted by Philb, co-founder of trading suite Decen Trader, Bitcoin's Bollinger Bands continue to contract on weekly timeframes, reaching rare levels. The outcome of each example is obviously a big, expansive move, he told Twitter followers on the day. The funny part is that in each of the examples, Bitcoin spent 6 to 8 weeks tightening further from the width level we are now at before a big, expansive move, so I'm afraid there's a good chance this thing winds up further. Whether up or down, Bitcoin's current increasing correlation with gold was something to take note of, Charles Edwards, founder of asset manager Caprioli, added. Bitcoin bottoms often align with high correlation to gold. We have that today, he declared alongside a comparative chart of previous such periods. It's much better when Bitcoin is correlated to gold, unshackled. And then it finishes just saying that it's their views are their own opinion on all this stuff. So the thing is that historically speaking, Bitcoin is a non-correlated asset. People will oftentimes start to say, oh, look, it's following alongside the pattern now with the S&P 500, as they're just mentioning here. Oh, look, it's following alongside that of gold itself. But then there's this divergence that takes place, and Bitcoin finally just decides it's going to do its own thing. So it's only up to a certain extent that you'll see some of these similarities, but Bitcoin in its own right over the long term is a non-correlated asset. People look at it and say, well, it's a tech-based item, so because of that, it fits in that category with the S&P 500. it's its own beast. Same thing. People say, oh, it's digital gold. Bitcoin is its own beast. It's the leader of the cryptocurrencies. And as it is, there's a whole slew of regulations across the world that are trying to take place for that of crypto, some of which would directly impact Bitcoin, some of which wouldn't. And then you have to factor in all the other geopolitical things that are going on in the world right now. What's going on with Ukraine and Russia? What's going on with the midterm elections here in the United States? 6 to 8 weeks from now, could we see some sort of a big divergence take place with that of Bitcoin itself? Why not? We are at a critical point right now where we've overextended ourselves quite a bit in this just mundane consolidated space for Bitcoin, where the price really hasn't moved much between roughly $19,500 and I think it was $21,500, if I remember correctly. So that's a very expansive amount of time for it not to be doing much of anything. So what exactly is going on? Not a lot of people are trading, or people are just kind of buying and selling. They're scalping it a bit, right? What you need is some big players to come in. With the new year, we might see some fresh money come into play. That is something that seems feasible. 2 months from now, 6 to 8 week period, 2 months from today would put us at December 24th. So Christmas Eve. A little bit beyond that. So if we're just breaking beyond the 8-week barrier, let's say we put it at like 9 weeks. Okay, that's a fresh start, new year. People that want to come in, maybe they're worried about things from a tax perspective. They might feel like, okay, I can go ahead and go gung-ho on this because last year I was able to finish off all of my tax write-offs, my losses, all that kind of stuff. We could potentially see those things kind of come into play. I think that we are getting to a point where people are getting tired of nothing happening. People are wanting to make profits. People are going to want to put their money into something. They're waiting for something to move, and it's kind of like a dance floor. Somebody has to go out on the dance floor and make the first move. Could we see this extend out even further? Yes. Historically speaking, we could see it take quite a bit more time of this bear market before things start to move. But where we're at right now, we're approaching on like the standard average for this. So right now we do have it further than, for example, back in 2020, the time that the bear market was taking place there was only about, I believe it was 33 days. And where we're at right now, it's significantly more. We're at like around 130 or so days. And we're coming up very close to that median average. So could it hit much longer? Potentially we'll have to wait and see. I'm personally feeling pretty optimistic about it. I just feel like we got to get through these midterm elections, which is the early part of November. And then I think there could be an opportunity there where we start to see a run. But let me know what you guys think down in the comments below. Again, I am not a financial advisor. This is not financial advice. Thank you so much to my Patreon supporters. Double shout out thank you to WeLoveSafeMoon.com, Murad Shaker, Victor Vegas, and SafeMoon Oz for being higher level patrons. Also, thank you to my YouTube members for your support. And if you guys are new to the channel, don't forget to hit subscribe, hit the thumbs up like button. God bless, and we will see you in the next episode.